So just sort of kicking off, before we kick off, just want to acknowledge the traditional owners of country throughout Australia and recognise their continuing connection to land, waters and culture. We pay our respects to their elders past, present and emerging. This is an exciting conversation for me. It's odd to think that I'm going to talk regulation, I'm going to talk digital assets, and I am enthusiastic because this is a conversation that happens in every single room that I'm in at the moment, and everyone's challenged by what we're talking about. Everyone's trying to feel their way through. There's real interest, and probably best reflected in the fact that this event has been live for a little bit over a week. We've had 350 registrations, and I don't doubt that if we gave it a reasonable nudge beyond this, 500-600 people, there's an appetite for this conversation at the moment, which is very encouraging for me. I've got great speakers today. This is an all-star panel. I know everyone always says that, but deliberately chosen for the skills that they bring, for the conversations they can bring and the value they can bring, and I'll let them each speak to the particular lens that they have. I think it's sort of important to sort of recognise as well what I want to achieve today and what I don't want to achieve, because the reality for us is this is a conversation that will be not as easy to follow if you are new to the industry. I don't propose for this to be a sort of a blockchain 101. It's a conversation that's relatively sophisticated. Don't feel if you fall behind a little bit, it's something you can't understand or shouldn't understand. Reach out to me. The reality is the professionals that we're speaking today have a lot of experience in a space. We want to be a fast-paced conversation. The thing that this isn't today is it's not a conversation about builders. I know often it's the case that people say, what about the people building products? That's another conversation. I don't want to try to do all things and be all things to all people. The reality of the conversation and the views you'll hear today are that they're a reflection of the issues that you will face if you're building things. So that's one of the keys for me of what we are and what we aren't seeking to do today. The other thing to know, again, is who I've got involved tonight. We're not going to do long introductions for everyone. The reality is I'm going to get Amy Rose to put LinkedIn profiles in here. We don't need long-winded introductions, just reading out. They're a great panel. Hannah Glass from Kingwood, Mallesons, Laszlo Peter from KPMG, Ulisse Dell'Orto from Chainalysis is the MD of Asia Pacific, and Natasha Blycha from HSF, Herbert Smith Freehills. All terrific speakers. I'm looking forward to everyone giving us their contribution. I think it's important now to really contribute yourselves. I want you to be putting into the chat window who you are, what you do. I'm going to be asking you for questions. We have a lot of questions. The truth is, for the regulators in the audience, people are scared to ask questions in public. So they've come to me. I have plenty of questions. I would like to supplement them. Everyone's keen to get an answer, but they're not necessarily keen to ask it. I have plenty. I'd like to supplement it with people who are in fact jumping in themselves. But I'll kick off with Hannah, and she can tell us her view, and then we'll quickly roll into some short conversations from everybody. And we're going to spend the bulk of the time answering questions that are of interest to the group as a whole. So thank you all, and Hannah, I'll leave you to kick off festivities.
Thank you so much, Steve. Apologies, everyone. It took me a little bit longer than I thought to enter into the conversation. But, that's just part of the world that we're living in. And isn't it ironic that when we're discussing technology, we still have technological difficulties? So I think my view here is something that a few people have probably heard me mention before, but we are almost moving beyond it as a discussion of digital assets. We've sort of been talking about whether a crypto asset is a regulated product or not for quite a while. And we've gone through the iterations with Bitcoin, we've gone through the iterations with various different tokens that were issued through ICOs. We're now in DeFi, and we keep on going back and forth. And realistically speaking, that conversation has been done to death. And from where we see regulators sit, it's relatively well settled in that if you fall into the regulated definition, you're in the definition. If you don't fall within that, then you're probably not. And there are other things that you need to consider legally. But that's not the most exciting thing that's happening. And in particular, the more that we focus on that, the more time we spend talking about things we probably don't need to be thinking about. And because realistically, blockchain is actually just a solution. And we need to make sure it's not a solution looking for a problem. We need to make sure that it's a solution for a problem. And what's most exciting at the moment is that people have sort of moved away from those we need to get someone to change the law conversation to move towards how can we use this as a tool to solve an existing problem. So if you're looking at what's happening in the broader industry, and that can be looking at traditionally people looking at financial services, it could be looking at particular areas such as supply chains and logistics, it could be looking at credentialing, any number of different projects. The ones that are really interesting and really different and really pushing the boundaries are those that don't just say, we're going to use blockchain and we're going to solve the world. They go, we are going to solve a particular problem. And blockchain is what, or DLT, and I'm using those terms interchangeably, is actually just one of the many things that we can use within that. And what's really interesting is when you get to that stage, we're not talking about let's change the law. We're actually just saying, well, are there any gaps that we need to fill in? In most cases, there probably aren't, and there certainly aren't as many as people think there are, because we have the beauty of being able to say, well, this is, if we are treating this technology as back-end infrastructure, the same way that we don't regulate the internet, but we certainly regulate the content on the internet and we regulate the use of the internet. So too, we could interpret things in the same way for a blockchain-based system or a DLT-based system. So it's really about being creative in the problem-solving aspects and using the various benefits of new technologies to solve real problems and working out how it can work within existing frameworks instead of just raging against the machine and saying, we need to change everything because we have a new technology and we want to use it. Thank you very much. Because actually that wastes time, money, and effort and prevents us from getting to the real beauty of this, which is it's a solution.
Is that it, Hannah? We're rolling straight in. I like it. Punchy. Thank you. We're going to jump on to Laszlo's view of the world. Laszlo, as I mentioned, is the head of blockchain services Asia Pacific at KPMG. Laszlo, do you want to give us the snapshot of the world as you see it?
Well, there's so many things happening. So today I thought I might focus on maybe a small vertical, which is around the virtual assets. And what I mean by that is the digital representation of value that can be traded, transferred, or used as the potential payment mechanism. So I'm not referring to a digital representation of fiat. But what we observed from 2018, since the hype went a bit more mature, is that all these virtual asset providers and the whole industry as a whole embarked on a journey to institutionalize and adding more mature players to the industry. That obviously brought several challenges along the way with regulators, various degree of maturity of virtual asset providers, consumers, and all of them interacting and behaving in various degree of maturity. It also brought a high degree of innovation, especially in the financial services space. Not just through creating new products and services, but also a raft of new players that are coming to this industry without any baggage, not weighed down by legacy infrastructure or legacy processes. And what we find that it's quite interesting with this new type of players in this marketplace is this very strong product-driven mindset. And they are benefiting from, on one hand, very sharp customer focus, like design for convenience type of players. And on the other hand, superb speed of execution. They can churn out incredible solutions in modern technology that are desired by their clients. But also, they have a strong appetite to address compliance. They're engaging with regulators. And there's a healthy mixture of competing and collaborating with incumbents in the industry, but fundamentally redefining the playing field in virtual asset products and services. So these virtual asset providers have the opportunity to go beyond the regulatory compliance, mature the industry, and bring in large institutional investors that are looking for obviously a very different degree of operational excellence or trust, robust and scalable compliance. And by addressing these, virtual asset providers have the opportunity to obviously scale their business and at the same time maintain the speed and agility that set them apart. Obviously, that could be a whole plethora of other dimensions that this industry is looking for, and the opportunities that we see, anything from yield and managing yield with risk, which I'm happy to talk about. We're authoring a paper with lots of industry participants, both from the virtual asset as well as from regulators, government, and banks, and so on, to address some of these points, as well as combining a perspective around what would really differentiate these players from the early days startups and innovators into mature players that can play, compete, and scale their businesses to address the institutional landscape. So I'll leave it at there. Happy to answer some questions later and touch on other topics as we go along.
Thanks, Laszlo. And I think it's sort of interesting to note in the room as well. I recognise that I sort of distinguish as sort of the true believer space, so-called, versus a conversation around blockchain DLT. And there's criticism when people talk about closed networks and private blockchains, whether it's, whether it should be part of the conversation. I know, Laszlo, when you talk about a consulting firm, KPMG, known to everybody, some people say there shouldn't be consultants, it shouldn't be lawyers. I mean, I think they're conversations that need to be had because this is part of the ecosystem. It doesn't necessarily mean it's part of the ecosystem everyone wants to spend their time in. It's just there are businesses that are emerging and opportunities that are emerging, and I think people are gravitating towards those opportunities. Thanks, Laszlo. Ulisse, it's just interesting from Chainalysis. Chainalysis coming into the region is sort of the introduction here. I'm very happy to have him on this call tonight. We've had some conversations over the last couple of months. It's obviously a brand that has global interest and attention, and I'm looking forward to your snapshot of what the ecosystem looks like from your perspective. Currently out of Singapore, formerly out of London. Thanks, Ulisse.
Thanks, Steve. Very happy to be here and to be part of this fantastic event. So today, I would really like to talk about mainly two things. The first one is transaction monitoring, and the second one is what we have identified as trends or usage of cryptocurrency in Australia. In order to introduce transaction monitoring, I would like to talk a bit about how Chainalysis was born, because Chainalysis was and is the first transaction monitoring company in the space, and this led to a completely different industry. So I'll definitely talk about that and about other things that are related to Australia. So to give you an understanding, Chainalysis is the blockchain analysis company. It provides compliance and investigation software to leading banks, cryptocurrency businesses, and government agencies. And the company was created in 2014. And I believe that it's very interesting to go through this because our CEO is actually the co-founder of Kraken, one of the largest exchanges in the world. And the reason he created Chainalysis is that he faced mainly two issues. So the first one was that when Kraken was approaching banks to try to find banks to work with, banks wouldn't want to accept cryptocurrency or funds that are derived from cryptocurrency because Kraken wasn't able to prove the provenance of these revenues, if you like. So that was the first time we started to think about, okay, there must be a way for us to justify that what we're doing is licit. Another reason that led to the creation of Chainalysis was the Mount Gox hack. So for those who are not familiar with that, Mount Gox used to be the largest exchange in the world, and it was based in Tokyo until it got hacked. And the interesting thing is that the founders of the exchange did not realize that the exchange got hacked for 18 months. So for 18 months, the hackers stole funds from the private keys of the exchange, And then Japanese authorities started an investigation that was conducted by Chainalysis. So these two events led to the creation of the company and marked the beginning of transaction monitoring. Now, when we look at transaction monitoring, most cryptocurrency value is transferred through services. And so what Chainalysis and other companies do in the space is basically create the connection between the blockchain and real world services. So if you were to go on a blockchain explorer, for example, you would see a lot of inputs and outputs. So numbers, string of letters, but you would not know who's behind those transactions. Now, Chainalysis does not know who's the individual behind those transactions. That being said, what Chainalysis does through proprietary heuristics and specific, data analysis is basically creating what we call clusters. So those are a group of addresses that we believe belong to the same entity. And this leads to identifying specific services such as gambling sites or cryptocurrency businesses or merchant services or mining pools, for example. And that really allows agencies, government agencies, banks, but also cryptocurrency businesses themselves to distinguish licit activities from illicit activities. And that's extremely important. Obviously, this applies to all businesses globally, but today I want to focus a bit more on what we're seeing in Australia, and I'm going to give you, some snapshots about what is the current situation when it comes to cryptocurrency adoption in Australia. I'm going to have slides that I'm going to share with Steve, so don't worry, you're going to have those after this call. So what we have identified for our crypto crime report, which is a report that we have recently released looking at the current status of crypto crime globally, we have seen that generally Australia ranks 20th on our global crypto adoption index. So this is, out of 154 countries. This index looks primarily at 4 main variables. The first one would be on-chain value received. The second one would be on-chain number of deposits. And then we look at on-chain retail value and peer-to-peer trade volume. Obviously, feel free to go on our website to look for the entire report. But this is what we have when it comes to the global picture and where Australia fits in. If we look at the OECD countries, so 37 countries, actually Australia ranks number 5, which is very interesting because this has a lot of very large countries in this list. If we look at the on-chain volume received, actually Australia ranks number 18 globally. There's a couple of countries in Asia that are ahead. So obviously there's China. Interestingly, we have Vietnam, Japan, and Hong Kong. If we look at the OECD member countries, Australia would rank 11th, and we only have very few countries ahead of Australia. We have, in terms of APAC, we would have South Korea and Japan. Now, if we were to look at the peer-to-peer trading volume globally, Australia ranks 12th in the world. There's a couple of countries that are ahead of Australia, but it actually has a very big impact when it comes to Asia Pacific, because behind China and India, Australia is the most important country when it comes to peer-to-peer trading volume. When we look at the number of, the positioning of Australia in the OECD member countries, Australia would be 5th. And so that would be the number 1 in Asia Pacific. If we look at, illicit activities, so this is an important point also that I want to make. Often we think of, cryptocurrency, or some people at least think of cryptocurrency as being very much connected to illicit activities. Actually, what we've shown in the past is that just a bit more than 1% of the overall activity in crypto is connected to illicit activities. So it's a very small number. It's a big number, if you like, in terms of millions of dollars, but it's a small percentage compared to the overall value that is created through cryptocurrencies. If we look at Australia, we have analyzed illicit value sent and received on chain from July 2019 to June 2020, and we have identified $4.2 billion of on-chain value received and sent by Australian services. What we've also identified is that 1.7% of that, when it comes to value received, represented illicit activities. So that means that if we look at on-chain value received in Australia, 71 million out of those $4.2 billion are connected to illicit activities. Now, if we look at sent value, we're looking at 0.8%. So that's $34 million of illicit activity sent in Australia. Now, what you might ask yourself is, why do we have a value received that is higher, much higher than the value sent? So there's different reasons to that, but one of the reasons is that often we identify a lot of group of addresses to clusters that are unspent. So if, for example, there's a hack, often what happens with criminals, they tend to sit on specific funds for years or until that's the right time for them to make the right move. So this is just some of the variables that I can share about Australia. And this was the purpose of this introduction, was to really give you an overview what transaction monitoring is and where we stand when it comes to Australia.
Terrific. Thank you, Ulisse. It's one of the interesting things for me because it's a narrative that remains baked into the conversation, I think. I think there's expectation or a belief that it must all be almost exclusively illicit. And it was something that's been very, very difficult to displace as a general view. Even as digital assets and the discussions around digital assets have grown, the easy pushback for many people has just continued to be, it's all the dark web, it's all nefarious. So those stats don't tell that story. So that's an interesting observation. Natasha, can I get you to switch your camera back on? I think it's important to frame Natasha by saying I think she probably has the most interesting LinkedIn and news feed that I've ever seen. She's always listening and paying attention to things well outside of this space that are fascinating to me. Also at the heart of some of the biggest projects I think that Australia has seen. I'll let Natasha speak to those projects, but I'll let her give us a snapshot of her view from Herbert Smith Freehills in her role as the global head. I like the fact you've gone global too, Natasha.
I've definitely gone global.
You just go
proper global.
So I'll let you do your magic.
Thank you, Steve. So when I was thinking about what would be useful and I was trying to think who would be attending this meeting, I thought we might just go back to basics, because the truth is when it comes to digital assets, we actually don't know what they are. So I thought, let's go back to first principles and talk about taxonomy, which sounds like a very interesting thing, very exciting thing, but it actually is. So having been involved with some digital assets, which are quite passionately pursued by people in this industry, are crypto assets. And we've spent a lot of time as lawyers trying to help people to be able to define their digital assets or their crypto digital assets into certain categories. And all of you on this call will be familiar with that dance that's happened the last couple of years where we said, God, is it a utility token? Oh no, we don't have that here. Is it a payment token? Is it a crypto token? Or is it some kind of security token? And God willing, we don't want it to be a security token, because then we're going to get in trouble with the regulator, right? Everyone's done that dance. But digital assets are actually much bigger than crypto assets. And the truth is there isn't a taxonomy, and there isn't actually a really neat way to be able to understand the importance and the value of digital assets. So why do we care? Because we like to own stuff, and a digital asset is an asset. So it's something we want to own. And this gets really interesting and really exciting, and I can actually draw your attention to, I know there's some people I work with. I think I can see Joni Pirawich on this call is somebody who's working in the space of trying to identify a taxonomy in digital assets. If you are interested in this space, I really recommend the Cambridge Centre for Alternative Finance put out a really useful paper only in the last few months, which is exactly trying to say, what the hell is a digital asset? So let's go a little bit deeper into the trends that we do know about digital assets and what we're seeing in the market. So what we're seeing is it doesn't actually, for legal purposes particularly, and to be honest, that would be something I would be worried about from the start, particularly if you're someone building a product or you're wanting to raise funds, is what do you actually want to do with your digital asset? Because you don't want to bump into legal issues down the track. Is when you're trying to sell, it's true, blockchain is a solution, but in some ways it's a bit different to that. Digital assets tend to often move on blockchains, but they can move on different platforms as well. But if you don't want to bump into a legal issue, then it's not completely agnostic. One of the things that you should look for when you're trying to work out if you're going to be able to have access, control, or ownership of your digital assets, or if you're trying to create digital assets because you want to get rich or you want to make a new product, then you need to think about the vertical or the industry that you're playing in if you don't want it to bump into legal issues. So what do I mean by that? If you are, for example, trying to put together a product that has a financial bent or is going to be offered as a financial service, then you're going to be looking at a whole different type of legal rules pertaining to any assets that you produced from your blockchain or DLT system or platform that have a digital asset manifestation. That will be quite different. Obviously, if you look at the things around the consumer data right, that's born of privacy requirements, then at the moment, again, in the banking sector, that's quite important for you if you're playing in Australia. But down the track, in terms of energy and other industries, they also will have higher lots of requirements. So if you want to know where you're going to bump into a legal industry, it's not completely agnostic. Some things are agnostic, but most of the time, look at the industry that you're actually in to work out if you're going to bump into a legal issue. So if I was to put those things in big buckets, on one side is compliance, is to make sure, for example, your AML CTF requirements are met. And again, any of you who've been involved in trading digital assets or crypto assets would know that that's a highly regulated space. So as a trend in the last few years, that compliance piece has come up. There are lots of ways to get that wrong if you're not paying attention to whoever the ID of the people who are getting users of your exchange. And the second sort of end of that trajectory of legal concern is privacy. And that's where we're making sure that consumers themselves are able to have access to data. So when you have a digital asset, it usually has an interplay between those two legal considerations. Something else I would say as a second trend is when it comes to a digital asset, just because you classify as it's something today doesn't mean that's what it's going to be next week. So it's what the digital asset continues to do, which will turn it into something that bumps into the law or not. So oftentimes I saw people do a very good job, for example, of crafting what let's call in the global sector, we call a utility token. And then down the way, as they engaged in acts which showed ownership pertaining to that token, it would turn into security token, which would then have regulatory impacts. So don't just assume because you classify a digital asset in one way that it's not going to change over time. So pay attention to down the road. And the other thing I would say is a big trend is, you know, you have to spend a bit of time paying attention to the different rules in different countries. And lots of people want to put together big global platforms or do a big global play with their products. But really, there's a lot of commonality between jurisdictions, but there is not one set of rules between any jurisdiction. So just because you start in Australia if you're servicing clients from other jurisdictions, you need to be careful about that. And I'm probably running out of my time already, but I want to talk to you about my favorite digital asset, which I don't think the world is truly awakened to yet. And that is a smart legal contract. And a smart legal contract is actually, the way I use the term, something a bit different to a smart contract. So the way that I use the term smart contract, what I mean by that is I mean code, executing code on a blockchain. When I use the term smart legal contract, I'm talking about that thing that lawyers do and people do when they're trying to scribe a deal and putting it into a digitized form. And basically, let's be very informal here, basically sticking a digital brain or a smart contracting ability into a legal contract. So when it comes to smart legal contracts, why I think they'll be super interesting as digital assets going forward is because if you run a smart legal contract over time, that contract will actually start to become fat with data. So it will accrue data. It'll almost become three-dimensional. So that becomes a very useful piece of information that you can use to give you information about what you want to do in other circumstances. So anyway, that's my my taxonomy talk and trends on digital assets. Steve, I've gone over time, I bet it. So I'll go back to you.
I'm going to give you 10 more seconds. The Digital Law Association. You forgot to mention your own thing.
Oh, okay. So as Steve said, I get involved in a lot of things. Digital Law Association is super exciting because what we have found is in this space, there are not enough females leading. And we all want females to help lead because we have men leading, but we also want females to lead because then we're going to get a better equitable outcome for everyone. So Digital Law Association, Google it, check it out, or someone will put something in the link. That's where we're trying to make sure that we can make submissions and we can help to move the dial in making sure that, for example, what's happening with surveillance, what's happening with digital twins, are there good ethical principles being built into these things? So that's really exciting. Got about 1,000 members. Please join up if you're interested, and you can be a man or a woman.
Thanks, Natasha. Appreciate it. So here's what's going to happen next, and it's very difficult. Normally lawyers want to talk to you because they charge in 6-minute increments, so they want to at least max out the 6 minutes. I'm going to try to do literally a question a minute or faster so we can get through these things. So if there's a yes or no answer, let's go for that. But there are a lot of things, a lot of different subject matters that people want to get across. As I said, lots of people who have asked me to ask on behalf of them as well. So let's kick off those questions quickly. Ulisse, I'll start with you first. How do you define a high-risk exchange or a high-risk jurisdiction? What are the things you quickly look for in a high-risk exchange or jurisdiction?
Sure. So when it comes to high-risk exchange, we're looking at a couple of things, mainly 3 things. So firstly, whether this exchange has a KYC system, so know your customer in place. Secondly, whether this exchange has any criminal ties. And last but not least, we look at the exposure of this exchange to illicit activities. I've seen in the questions also, how do we define illicit activities? So we have actually a list of activities that we define as being like high risk or illicit, if you like. And this could be, dark markets, terrorist financing, sanction listed entities, exchanging funds, child abuse material, ransomware, stolen funds, scam. When it comes to high-risk jurisdictions, we're looking at the cryptocurrency activity, but also the global regulatory landscape. Some of these examples could be Iran or Venezuela.
Terrific. Natasha, I'm going to get you to keep your camera on because I'm going to keep peppering questions. I'm going to ask you this question whilst you switch the camera on. You've got 1 minute apparently. An ex-lawyer, Jonathan Hatch, has asked, smart contracts, are they no more than automation of standard contracts? If so, who is liable for bad coding? Is the answer the same when platforms are facilitating, or do we just blame the client for using it? You've got 60 seconds or less.
I can't answer that question in 60 seconds, but I'll have a crack. Jonathan Hatch, I'll take you out later. Okay, first thing, a smart contract is totally different to a smart legal contract. So a smart contract itself, because the way I see it, it's just code executing on a blockchain. It has no legal veracity whatsoever. I mean, unless you said software was a contract, it's the wrong question. A smart legal contract, if it's properly built, the application that hosts it is properly built, you can get both. You can actually get automations, you can actually extend automations out of that contract, and you can also put natural language binding provisions into that smart legal contract as well. So think of it more of as a hybrid, where you've got a piece of paper, but that piece of paper is machine readable. But you also have natural language, so you can do all the normal stuff that lawyers do in their legalese, and you can also start to add notices. You can start to make calculations. You can start to add arms and legs to your contract through using smart contract type technology to execute performance of the contract. So Jonathan, that's it. I can't do it in 60 seconds. There's a lot to it, but the answer is you can. It's legal, you can.
So there you go. So that can be an offline conversation. Hannah, here's a question for you about CBDCs. In advance of it, wholesale CBDCs are being discussed by the Reserve Bank, central bank digital currencies. Is there a case for a retail CBDC in Australia in the context of the open banking and the new payment platform?
What I'm going to say is I think the first thing we need to think about when we're talking about CBDCs in general is it's a central bank issued digital currency. That doesn't necessarily mean it needs to be on a blockchain, but you need to think about why you're implementing it. So Steve, as you said, there are discussions going on around wholesale. When we talk about wholesale or retail, the distinction is actually between who's actually able to access it and what are they using it for. People talk about retail because that would be effectively, I'm using a retail central bank digital currency, which is instead of using cash, I'm using a digital currency, which has been issued by whatever central bank that has issued it. The reasons behind why you do that are different, and the reasons being explored by various different central banks around the world are all different. So for instance, some of the jurisdictions in Europe are looking at retail and wholesale, for instance, to enable instantaneous payments. In Australia, because we have the MPP, we don't have that same pain point. Again, it's what are you actually trying to solve with this? In Australia, we're also really fortunate in that everyone uses digital versions of money every single day. You probably don't have wads of $100 bills sitting at home. You're much more likely to have a bank account. And when you pay someone, you probably use your phone, a card, or you transfer it over an internet app. All three of those methods are digital. And the type of money that you're using there is a retail form of money as opposed to a wholesale form of money. And that's because of the interaction between the sort of retail bank, i.e. the bank that you actually go to in Australia, frequently Big Four, but there are many mothers here too, rather than the central bank, which is the person who's actually issued you the money. And realistically, as a retail person, the only time you interact with a central bank is when you've got that $100 bill or $50 or $5 in the case of what I usually hold.
And I'm going to cut you off. We're going fast. Laszlo, here's a question for you. When are people going to finally get it? What's that tipping point moment for institutional investors to go, it's a thing? When's that coming and what is it?
Can I also get maybe 30 seconds just on the CBDC part? Because that's an interesting topic that you skipped, which is around liability. And I think Hannah is right. We don't really want the central bank to have liability towards retail consumers, because I have a CBDC right here on my phone, right? It's like, as you said, you can't do anything pretty much in Australia. But what's interesting that was not asked in the question is, would you have a corporate issued, not a central bank, but a corporate issued digital currency like the JP Morgan coin? Because that is really interesting. But I go back to your question. So just to wave it in. So when would the institutional space ready for something like this? Well, on one side, you would have to think about, would these organizations like large banks or corporates who are interested in getting into this space, would they consider virtual asset providers ready at the same level of operational excellence as current traditional financial service providers because they are regulated in a space of fast-moving virtual assets. And to reach that, there are probably, in my mind, there are 4 key elements that virtual asset providers will have to get right before the institutional investors or money managers or fund managers will come and play with them. And one of them is about evolving the B2B customer engagement, so the digital channels into an institutional space, having the right level of compliance as a second one, which anti-money laundering, counter-terrorist financing, and in particular, know your customer, like KYC best practices, fully implemented and digitized. Operational excellence, especially around clearing and settlement, but also, especially with virtual asset custody and asset management, which has to be right up there. And I think, Laszlo, you mentioned the monitoring part, which is right in there. And lastly, the fourth one is about governance. And it's seldom we don't hear too much about these aspects because we sort of bamboozled by the technology part. But actually, governance with risk management and operational controls, the 3 lines of defense and so on, are fundamental for institutional investors to come into this place and play, because they would have the comfort and confidence that the operators are all genuine and they have all those necessary controls in place.
Before I go back to Ulisse, Natasha, here's a question. It's a yes or no. So we're going to catch up that time before. We've got Richard Wong asking, do you think Ethereum is going to be the network that everyone will build smart contracts on?
Oh, I can't answer that. Do I have to do a yes or no? I plead the fifth. No.
The fifth is fine. The fifth is fine for me. Ulisse, here's a question, and this is one that, in the nature of the business, is probably a tough question, but no doubt one that you've probably heard before. Some people think that the business that you're in is not the business that should be involved in blockchain. The question is it antithetical to the whole space? You know, how do you avoid helping governments doing things that maybe citizens don't want? What's your general answer to the position that, you know, maybe Chainalysis shouldn't be doing the thing they're doing because maybe the world doesn't want a business like Chainalysis?
Sure, that's a fair question, and we get that a lot, and happy to answer that. You know, like the main goal of Chainalysis is to build trust in blockchains, and if you see, you know, like the trend that we're seeing is that financial institutions, governments, and companies are becoming more open to the idea of adopting cryptocurrencies as a means of payment, but also as a licit way of, you know, like exchanging value. And until now, you know, like a lot of people still thought that cryptocurrency was connected heavily to illicit activities. So what we do is basically demystify that and help, you know, like government agencies, governments in general, you know, like when it comes to regulation, for example, make sure that they understand what's possible and what's not possible when it comes to transaction monitoring. When it comes to investigations, you know, Chainalysis was actually used to take down the largest child pornography website in the world a while ago. And this just shows you the need for this type of solutions in the space, not simply to legitimize the space and to build trust in blockchains, but also to prevent these type of activities from existing in the first place.
And this a quick question for you again, follow up, Ulisse. And you know, Australians love to hear this is the case, but you can break our hearts if you want. Are we punching above our weight? Are we better than the rest? Are we, relatively speaking, ahead? Where are we in a global sense from your perspective?
I think that Australia is doing fantastic work. You know, it really depends on how advanced is the knowledge of the regulators generally to see, you know, like more cryptocurrency businesses starting a business in Australia. I think that Austrac, the regulator in Australia, is doing a fantastic job, and so the usage of cryptocurrency in Australia is growing a lot. There's going to be more and more of that moving forward, and we're also starting to see financial institutions opening up to this opportunity, which is fantastic.
Hannah, here's a question for you, because we all know that this is the view of a lot of people who are building things, decentralized autonomous organizations. they're outside the law. It doesn't matter. Do what you want. Build what you want. Stick it wherever you want. You don't have to worry about it because it doesn't exist anywhere. That's the truth, right?
Not quite. Generally speaking, and this kind of goes to the whole area in particular, just because there's a blockchain element in whatever you've designed doesn't mean you're outside the law. It just means that that's something else you need to think about. And Natasha's point before around, you're creating a digital asset, actually, and you need to think of the industry you're building it in. You've actually got to go one further and say, we're not just looking at building a digital asset, we're building a digital asset for the industry. We're building a digital asset for a purpose. And then it's looking at what that purpose is and how that works. And a lot of the time that ends up working like the real world. Now, I'm coming back to DAOs. So the reason why it works with DAOs and why it's analogous is because when you get a number of people who come together and they have some sort of common purpose and common organization for a particular reason, they've actually possibly created some form of unincorporated joint venture or unincorporated association. Now, these sorts of ventures happen all the time. They happen when you have clubs at university, for instance, and generally speaking, it's all cool. Everything keeps on running along, except for when it doesn't. And when it doesn't go well, then unlike if you have a company where there's a limitation of liability, which means it's restricted to the liability of the company and no one can take your house, when you're a member of one of these unincorporated joint ventures, when you're actually participating in this, in the collective, well, actually your house is on the line. So DAOs, whilst they may appear to be a really simple and easy way to organize people to get ideas out there, to actually collaborate, you've got to be really, really careful because it's very, very quickly that it can transform from, we've got this really interesting piece of software that we're testing, to we've got this interesting piece of software we're testing, we're constantly iterating on it, and someone just lost a lot of money. And we can find who you are because you may not have used your own name, but you've used a pseudonymous name, which everyone actually knows is you. And the last thing you want is to have a problem because suddenly you're on the line and your house and all your assets are on the line because someone else who was part of the organization you were working in, being part of the DAO, stuffed up and lost a lot of people a lot of money. So they actually are kind of legal entities in and of themselves already. But I will add one other thing, which is that just because you're using a DAO doesn't mean it has to be outside or in this unincorporated joint venture. In all of these circumstances, you can legally structure it so that you have both the blockchain element and for the organization, as well as having some of those traditional legal structures. It takes a little bit more time up front to work it out, but there are ways of combining the two and being able to get the benefit of both worlds.
Natasha, this sort of follows on from that. Given there is a global push to legislation that pierces things like peer-to-peer encryption, is the world of privacy tokens and that sort of genuinely anonymized infrastructure, is it dissipating? Do you sort of anticipate that over time there'll be more harmonization in that space? Do you think that people will genuinely be able to be anonymous in these sorts of worlds, subject to no nefarious activity?
I do think I may be a bit naive, but I do think in most countries, most of the time, legislation is actually sensible. So it tries to actually find a balance, and it's coming back to that point between compliance and privacy. Those two things are real and often opposing tensions. So you are going to want people to have privacy, and you're going to want governments to be able to see what their citizens are doing. And, we're not in a position yet. I'll dare you to go and find a law which says the machine did it. We're not quite there yet. We're going to get to that position, who knows when. But right now, if you did it, if you're really the person behind it, the law will come for you. So these are basic things. You don't need to be a lawyer to really, if you stand back and say what's probably going to happen, just use your gut instinct and you'll probably work out where the law's going to come out on these big questions.
Laszlo, a question about the institutional side. We're seeing things, we're seeing DeFi, we're seeing liquidity pools, we're seeing yield farming, we're seeing all sorts of things that basically look like a big old lottery. And if you guess right, What's the challenge then? I mean, how do we find that balance that says to institutions, you can look at things that are comparable. You can look at yields. What's that look like? How do we balance the issue of yields and risk management to bring what people would consider serious money into the space?
I think the institutional space, just extending on Natasha's point, you would have to know who are you dealing with, because once you go into the install space, there's no such thing as anonymity or pseudo anonymity or anything of that. They need to know pretty precise. And if you just reflect back, I mean, this is a tough question, but if you go back to 2008, the last recession we had, when the Fed kept interest rates as record low, like now, and every fund manager was scratching their head. So what do I do? Where do I invest to get better yield for my investors? Or if you're a money manager, then you start looking at assets that are a little bit more exotic, more interesting, can generate higher yields, but also create some kind of risk on my balance sheet. So if you're not just a punter, like a yield farmer, but you are an institutional investor and you're looking at a higher degree of yielding assets, like, for example, cryptos, you would have to balance it out with some degree of knowledge around the risk that you're carrying as part of it. And as you move through the risk assessment of these type of assets, it goes back to who you're dealing with, who's the operators, who are the intermediaries, who are the custodial of these assets, how do they keep them, what kind of operations they have, what kind of monitoring. Goes back to Ulisse's point around not just Chainalysis, but all the regulatory compliance around not just how do you onboard those participants that you're dealing with, but how do you maintain controls down to the level where your own internal personnel has to go through very strict operational risk controls in order to satisfy fine-tuned and finely calibrated financial services style requirements of a virtual asset provider. And in that space, you suddenly start to deal with a very different, less libertarian, less utopian, less anarchistic style environments into more highly regulated, highly calibrated, and more trustworthy setups. And in my observation, especially in Australia, when you and Elisa mentioned that we are trading quite highly in that space. When I look at some of the virtual asset providers, crypto exchanges, we call them in Australia, who started hiring, like the independent research, hiring professionals coming from financial services industry, like seasoned, well-known, and highly skilled individuals to bring that level of degree of maturity and precision in operations. That's the level of signs and signals, plus the regulatory framework that we see less here in Australia, but more in Hong Kong or in Singapore, that brings the level of maturity to the market where a fund manager or a money manager, institutional investors who will be looking for to generate that yield for their investors.
Yeah. And I'm going to answer a couple of quick ones. Is there any regulation in Australia that's getting in the way of blockchain? Yes, every jurisdiction has the same complaint. So there is, and there isn't. Some jurisdictions view it as an opportunity. Some just think it's stopping them. Make a decision where you are and move forward. Someone else had asked.
I object.
Yeah, I do too.
The answer is a blockchain is not a blockchain is not a blockchain. So if you can scope the actual infrastructure that you create with your blockchain in a way that pays attention to all the legal issues that need to be considered, whether that's from your consumer data right or you're servicing people overseas of GDPR, all the way through to how you set channels or whatever you do, then it's possible.
That's what I said, Natasha. I said you'll find a way, one way or the other. Go left, go right. Just work through the challenges.
Work through the issues. Be patient. Pull through the strings, and you will undo the knots.
Can I add something else to that too? Sorry.
No, you can't. Come back to you with like 4 questions. Ulisse, here's a question for you. How do you distinguish the categories of services within the blockchain? Because we see it as this monolithic. Here it is. It just goes in. How do you distinguish between those services? You got 30 seconds.
Yes. So we have, we look at a couple of things. We try to look at them. Obviously, we have different categories that we've identified, but we look at like low, medium, and high risk. And so we differentiate them in these three subcategories, if you like. And this really helps us to make sure that whenever a cryptocurrency exchange is exchanging value with other services in the blockchain, they're able to automatically in real time understand and decide whether to like block transactions or just continue their operation. So low, medium, and high risk. And obviously we have illicit and licit activities.
And I'll come back to you. Yes, please have a go at me. Go ahead. Anna?
Oh,
yeah,
you were throwing to me. I wasn't sure if you were throwing to me or not. I wasn't going to have a go at you per se. I was just going to say, when we're looking at this, I think we're asking the wrong question about whether a blockchain is regulated or legal or not. I mean, we don't regulate email. We don't regulate Excel spreadsheets, but certainly the information that's in an email or the purpose of that Excel spreadsheet can fulfill a regulated purpose, or it can fulfill something that's completely illegal. If you've got a spreadsheet that's monitoring transactions on a website for child pornography, that is a very illegal asset. The Excel spreadsheet, however, that you use to manage your sort of daily, like your balance for your home, so you're not spending too much money on online shopping, no one cares, completely fine, go ahead. But it's not the Excel spreadsheet that we care about, it's the use of it. Same thing with blockchain. And it's one of the advantages of Australia is that we actually try to look at the purpose of it, the information that we're using, rather than actually go technology by technology. And that's actually an advantage we have over elsewhere in the world, where they actually look at the technology first. And the more that we do that, the more we're going to find issues where there are none, and try and advocate for change where we don't need to change anything. We can actually just go ahead and build stuff.
It's good. Laszlo, here's a quick question for you. You're a consultant. There should be no public, no private blockchains. It should be public or nothing else. You say what to that?
I think horses for courses in that in that space, and I full-heartedly subscribe to what Hannah was saying earlier. It's not about the technology, public or private, doesn't bother me, to be honest. We work in both space. We advise large fund managers in the crypto and altcoins they have on the balance sheet, because we audit them, and we build technology in private distributed ledger technologies for use cases in agri to materials to tracing uranium, if you like. The spectrum is quite broad. And I think the maturity in this market will come when we stop talking about the blockchain and start talking about the use cases that a technology combined with other technologies, because blockchain itself is just as Hannah said, it's an Excel spreadsheet, a little bit fancier Excel spreadsheet that is on append only, right? So it's a registry. What do you do on top of it, and how you build those use cases that multiple parties can collaborate on, or even if you can at crypto space, remittance is one interesting use case of this, but how do you implement that? Is it a corporate driven? Is it private? Is it individuals and so on? What do you do with it is, for me, is a fundamental question. And in reflection of where the opportunities lie, initially it was just the hype around the get-rich-quick schemes of everybody issuing their own token to doing something, versus later on, as the industry matured, became quite apparent that there are genuine, interesting projects that can really move the needle and create some new forms of value-add services, both on the token economic side as well as on the distributed ledger ecosystem side. And there are supporters and commentators and critics on both sides of the fence, and the critics always sitting in the back row in the theater and saying, I must have an opinion on this, so therefore either I'm taking it right on the left. You can't get it right. So I'm a consultant, sort of. I look at the both spectrum and saying, where are the opportunities, the commercial opportunities that can move ahead, create new sectors. But fundamentally, we are looking at what really changes the landscape in terms of moving industries that been fundamentally centralized for decades, if not longer, and then connected into a walled garden, into a hub and spoke model lately, like the connected enterprises, into a genuine distributed enterprise, regardless of a private or public, because the distributed enterprise changes the mindset of the senior executive, the way they think about digitization, the way they're thinking about creating new products and services and bringing them to the market. It's not about them owning the client, the channel anymore. It's about collaborating with others to provide a contextual and potentially a multifaceted service to the client. And I think once we have that, it doesn't matter how you do implement that Excel spreadsheet that Hannah talked earlier.
Thanks, Laszlo. It's a terrific. It's as many questions as I can force you to answer in a short period of time. I said that wasn't easy as I was looking in every direction. Laszlo, thank you very much. I know you're doing some work in the digital asset space. I think you'll be releasing some stuff soon, so you can sort of build on these conversations. Ulisse, welcome to the jurisdiction. You know, it's nice to have you relatively close in Singapore. I know you're making yourself available to people who want to talk more about this, and regulators and banks, and the business has been pretty extraordinary, to be honest, to watch the business take off the way it has. Natasha, you know, I think you're a beast in the most impressive of ways. I love that feed. I love it. Congratulations on the Digital Law Association as well. I think it's a fantastic initiative. I'm really grateful you were able to commit this time. And Hannah, thank you, Hannah. You are in all these rooms. Hannah is leading the RegTech working group for the National Blockchain Roadmap, which I think is critically important. So if you're in the RegTech space or you're looking to that interaction, then Hannah is the person that's cracking the whip on all of those conversations. There's a big event. V20 is doing an event next week. It's actually around the issues of FATF, the travel rule, the things that are really impacting the digital currency exchanges. I'll send out a link to everyone as well for it, but it's extraordinarily important, I think, and there are a lot of people from the regulatory space who are going to be there. Melbourne Connect, thank you for hosting this and making it glitch-free. It's always nice when we have events that go right. That's it. Thank you. Appreciate everyone's time. Heath Evans and Amy Rose, who did a lot of the grunt behind. Thank you very much. I'll leave you till the next time we get together. Thank you all for your time.
Thanks, Steve.
Thanks, Steve.
Thanks, everyone.